correction ahead, and also maybe you could tune into this conversation we're going to have with the management of JK Lakshmi Cement. Remember, they reported a pretty much inline set of numbers. The problem was margins didn't see a big improvement on a sequential basis. The stock, well, it's seen a bit of a re-rating over the last 1 year or so, but let's find out what's the way ahead. Mr. Arun Shukla, President and Director at JK Lakshmi Cement, joins us on the show. Hi, Mr. Shukla. Good morning. Thanks so much for joining in. Well, the numbers look pretty okay, pretty much in line. But as I mentioned, on the margin front, maybe in fact the street expected a little bit more expansion on a sequential basis. I'm referring to your standalone numbers. If you could tell us, why didn't that happen? Were you sitting on some high cost inventory? And also, what is the targeted EBITDA per ton from here on? Go ahead, Mr. Shukla.
Yeah. Thank you. Thank you so much. And yes, I agree with you. I think we have been performing quite consistently in the past, few quarters. And you talked about, realization target. I think we are targeting at least, 1,000 rupees per ton. That is what our target is. If you look at, the improvement which we have done for the last 3-4 quarters, I think the gap between the leaders and, JK Lakshmi Cement has dwindled. And our effort is to be amongst, top 5 companies in terms of EBITDA per ton. And the kind of effort which we are taking, which is more towards kind of, internal, efficiency improvement, be it, top line levers or the manufacturing costs, I think we are working quite incessantly. And hopefully, I think the kind of, direction which we have taken probably will be, inching towards, 1,000 rupees per ton EBITDA in maybe the next 6 to 9 months' time.
All right, Mr. Shukla, just to clear that point, when we calculated your EBITDA per ton, we don't include the other income. So for us, the numbers in the vicinity of around 620, 638 rupees, I'm talking about the standalone EBITDA per ton. So when you're talking about this 1,000 rupee odd number, you're referring to an improvement of around 200 rupees from current levels. Is that fair to assume?
200 rupees, yeah, that is what I'm, trying to tell, yeah.
Okay, so you're referring to the EBITDA calculations with the other income as well attached to it. But as you said, you're going to head to that level in the next 6 to 9 months.
So we
got that, sir. What about the volume picture? I recall when you last joined us, you were talking about volumes moving up by close to 12 to around 15% for FY23. Do you stick to that number? What should the volume growth be for FY23 as well as 24?
Yeah, we stick to that number. In fact, last quarter also we have grown by more than 12%. And definitely, I think our volume growth would be around 12% plus in the FY23.
And Mr. Shukla, for FY24, you'd maintain that kind of run rate? Any thoughts?
I think our base will be on a higher side. I think still I believe that we'll be growing at about, in double digit, 10% plus.
Okay, 10% plus growth for FY24 and 12% for FY23. Can you give us a little bit of qualitative guidance on how the demand situation is on the ground? Where are you seeing triggers? Where is the activity picking up now?
So I think last quarter and even coming quarters are going to be good because cement is cyclical in nature, and we are into good demand months right from today till about June 2023. And the kind of estimation which we have done in terms of growth of demand somewhere around 8 to 9% in FY24. That is what our estimation is, and our growth target is as I told you that will be growing more than 10 to 12% in coming year.
Okay, so 10 to 12%, and you're saying the industry growth could be around 8 to 9% in FY24.
That is what, yeah.
Got that. Can you tell us a little bit about pricing as well? How is the situation? Has pricing gone up compared to what we saw, say, a few months ago?
Yeah, prices are inching upwardly, but I think I would not say prices have gone up significantly. If you compare with last quarter, which is September, December, July, September, prices are almost flat. So realization-wise, I think almost flat, 1-2% higher than the previous quarter. And we see the prices will move a little bit upwardly in coming months. But price increase, demand is going to be good, but price would be about, maybe 2% higher than what we have today.
Okay, all right. Final question, Mr. Shukla. There could be a booster shot coming for the entire cement industry because the finance minister is talking about pulling back on GST from around 28%. It could come down to around 18%. That'll be good news, right? So how do you see this panning out? It helps volumes, but prices as well will come down, right? Go ahead.
So I think this is what cement industry has been demanding from the government, because cement is one of the most consumed commodity, and this is one of the, I would say, pillars for development of India, right? And this commodity is being charged at 28% GST. So hopefully, I think 18th GST Council is going to meet and they are going to revisit this GST rate over cement. And if that goes down to 18%, I hope that demand will definitely have a boost, and demand will increase. Of course, I think to that extent, maybe prices also will go down.
All right, Mr. Shukla, thank you very much for your time. Good speaking with you and good luck. That's JK Lakshmi with some perspective. I think we're at the end of the pre-open session.